So yeah, the team is fairly aware of what Dex Finance is because of course we have invested in it, so we've done our due diligence. But the community may not be. So maybe you can start by introducing maybe your team and your project in a fairly broad way.
Of course, yeah. So my name is Jake, the CEO of Dex Finance. We also have Mark here as well. He's our COO.
Hey,
Um, we have a really great group of guys and women actually that kind of started out almost a year ago with our first project. It was called Dex IRA, which is still very active and part of the new ecosystem. We kind of set out to develop an ecosystem that was more for longer term, more serious investors. Um, Hence the Dex IRA token, which kind of mimics a traditional IRA. Um, so kind of moving into the next phase, next genesis of what we want to do next. We kind of stuck with that same theme, and what we came up with was what we're calling the money market. This is more meant for people that are looking for um, you know higher APRs, shorter term returns, a little faster paced. But like I said, you can use your Dex IRA tokens within the ecosystem. Um, and our roadmap coming up is pretty filled as well with some like-minded products. But yeah, we have a really great team. At least 10 people on the internal team. A really awesome community of moderators and just people all around help.
Yeah, and one of the things that has struck me is that you have this system with well, several different tokens, and basically you can farm with some USDEX to USDC or DEX share BNB, and then you get some DEX share which you can stake in a different kind of pool, and then you get some DEX ETF. So you have created this system where investors can actually earn money without creating sell pressure.
Yeah, we're actually super proud of the ETF aspect of the protocol. Um, this is something that really hasn't been done at all on Smart Chain, and let alone using it in such a way that it does take that sell pressure off. Essentially, what the Dux ETF is. We have our first fund is basically a basket of blue chip tokens. It also contains some of the ecosystem tokens as well, in a small allocation. But yeah, basically the way the protocol is designed is we have the protocol. We have smart contracts handling the regulation of the peg token, which is different than what you may have seen in some of the other algo protocols out there, um, which can just really cause some serious panic in the market and these big fluctuations one way or another. So with robots controlling the peg instead of people, um, basically we've wound up with a real steady peg. We've been very healthily above peg since we launched, with no signs of coming off that depegging. But yeah, but basically, with once the protocol sells, it makes these sell orders to make sure that the peg token just doesn't go wildly out of control. We're basically taking those funds and converting those into our ETF token, which then can be earned by staking the DEX shares. So basically, what this does is it takes the sell pressure off of the peg token, and it creates buy pressure for the DEX share token, right, at the same time. And the beautiful part is, once you're holding these ETF tokens, there's several things you can do with it. One, you could just hold it. If essentially the ETF is a representation of the market as a whole, right? So, if when we get back to all-time highs, the ETF token worth about $30 right now, should be roughly double in price, depending on where we're at in the market. So
Mhm.
one, it's just a great store of value. You can hang on to it and just hold on to it as a a crypto investor. Or you can use it to get back into the ecosystem. You can burn it or sell it to get another token, right? You can actually claim all the assets within the ETF, or you can use our bonding platform through Olympus DAO, where you can essentially trade it back to the Treasury, and we'll for that bond, we give you more ecosystem tokens at a discount.
Oh, I didn't know that last part. That sounds great.
Yeah. We'll drop a link in the chat here. But I mean, that's actually another thing we're really proud of. We partnered with Olympus DAO, the kind of the leaders in bonding.
Mhm.
In fact, they actually built out their platform on BSC specifically for us.
Okay.
And as you guys know, these guys are, I think at their peak they were 6 or 7 billion in market cap. A little bit under now, as the markets kind of come down a little bit, but these guys are massive, and really proud to be working with them. In fact, I actually haven't checked our bond stats today, but we've been live on their Olympus Pro partner page, allowing our users to bond into using their protocol, their system, bond into our ecosystem tokens. Like I said, maybe just over 2 weeks now. Last time I checked, we were about $50,000 away from breaking their top 10 leaderboard in just a few weeks. Close to $400,000 in bonds over the first few days. So we're pretty proud of that as well.
And as an investor, basically, what do you recommend to do to find a balance, to have a good risk to reward ratio while not causing sell pressure for Dex Finance? Can you guide us through what you would suggest we do?
Yeah, so I'll take this one. I think that the strategy that I recommend the most is that people have most of their portfolio situated in the US DEX USDC peg farm, since it's just so stable and has minimized risk of impermanent loss. And we try to just tell people not to over leverage too much into the share token, even though it's the most volatile and that's where you can make the most profit. From the farms, the US Dex Peg farm, or your rewards from the BNB Dex Share farm, depending on how you do that split with your portfolio, you want to take all your rewards and generally stake them in the regulation staking pool so that you can get those ETFs. And then selling ETFs is a way that you can take profits regularly without hurting the protocol and kind of compound and build your holdings.
All right. So
if you don't mind, I'd just like to follow up on one of the points that Mark just brought up, which is kind of important. The regulation pool is like this really cool thing, and it's awesome to get these ETF tokens, right? But people should know that that the healthiest way for the protocol to continue to be successful is to keep the liquidity in the farms, right? So if you have if you're in the regulation pool, nothing wrong with that, of course. By all means, if you're especially if you're taking profits, right? This is a healthy way to take money out of the protocol without harming it. But the more people that are in that pool, the lower the APRs get over time, which actually is compensated by essentially, as there's more liquidity in the US DEX farm, we're actually able to sell more into that, which should keep the APRs pretty stable in the regulation pool. But it's just as good, if not better, to be providing liquidity and earning the same, if not a little more, maybe at current numbers, in the actual DEX share farm, as opposed to just being 100% in the regulation pool.
Okay, so there are some good ways to make profit while benefiting the protocol. So it's kind of a win-win. Are there also some like risks for the protocol? What could harm it in a way?
That's a good question. Honestly, I mean, not to sound overly confident, but there's really not. I mean, as an individual investor, there's really not too much you could do to be to be completely detrimental to the product. We always like to tell investors to just be conscious of where you're zapping in, right? Like if you take all your rewards for that day, and in Dex share, and let's say you go zap them all right into the US Dex farm, or something like that, that can cause a short-term sell pressure on like the Dex share token. So we like people to be conscious of kind of where the money is going and what where you're taking away from. But like I said, there's not really a ton. We had a question the other day about about the whales, right? Like someone was worried that what happens if a whale dumps on us, right? While it's always possible that there's whales, and it's possible that they could sell it at one time, right? Realistically, there's if a whale, especially in the US Dex pool, right? If a whale was to get in, right, he's only going to be able to sell down to his original entry point, right? And moreover, our treasury is sitting at over $700,000 in treasury backed assets, to specifically designed to defend the peg. If we were to get back down to those levels, and in fact we've even been discussing, some people have been, it's a little off topic, but while I'm here, some people are worried that is it too high above peg, right? Which clearly there's been a lot of buy pressure at these levels, currently at 1.45. But I guess my response to that is, we've seen very good support at 1.2. So the difference between 1.4 and 1.2 is pretty marginal. If you're planning on investing for a longer period of time, especially given the close to 2% returns daily on this farm. So at the moment we're not selling under 1.2. Again, we haven't got there. We haven't quite even got there since we launched, but that's the plan for now. And I guess to further that notion, we've even discussed maybe not doing buybacks, but doing like zap in liquidity ads once it gets to that under 2, right? So to try to make sure that we're like I said, not buying back and essentially wasting treasury funds, but adding buy pressure within that 1 to 1.2 range while adding liquidity at the same time.
Yeah, okay, so it's pretty solid. You have enough reserves and funds to ensure that if some investors are not like using the journey that you suggest with the farm and then the regulation pool and then using the Dex ETF as reward. Even if some investors start not doing that, you're not going to be to see a price decrease. But I mean, how do you manage to have those 2% daily? Because usually if you take a protocol that has like 2% APR per day, it's going to be usually some node or some rebasing token, but you make it in a completely different way.
Right. Yeah. We I'll be upfront about the fact that I don't really care for nodes or rebasing.
Yeah.
It's just an unsustainable model.
I'm with you.
Yeah, I mean, quite literally, up a pyramid. If you're giving someone money and the only way that they that they can pay you back is with, somebody else's money, basically, other new money coming in the protocol. It's just not sustainable unless there's more money coming in. Our farm APRs are, built off of standard models, right? Where, there's at some point, we're not saying it'll stay 2% in the farms forever. As more people are coming in, obviously those farms are diluted, right? And, they potentially will come down gradually over time. However, through that process, they'll actually be a lot more stable. So less risk at the same time, which, that's desirable, right? Two things to note though is, unlike other similar, people that that have done similar things like this before us, there's never been one that launched, obviously with all of our mechanics, first of all, but secondly, we had a pre-sale for both tokens. We're the first to do that as well. This gave us a lot more stability in both tokens, but the APRs in both, in all of our farms, are paid out in the share token, right? So this is, based on, outside of the total allocation for rewards, right? But how many people are in that farm, right? How much money is diluting that, those rewards, and the price of that token, right? So, honestly, we've been just kind of ranging in this, like, between $200 and $400 for a little while, as opposed to, like, some of the other ones you've seen, like they actually start super high, like they'll start at, $10,000, $20,000, and then it's just a race to get that, because it's a race to get that money out, basically, which just causes this spiral effect out, right? Because we launched, like, with actual liquidity and with some shares in the marketplace, rather than everyone racing to try to get their money out, it's more of a race to compound and build up this price gradually. So, in theory, if we can just slow climb, from we're sitting at 260 right now in the shares. If we just slow climbed up to 10,000 over the next year, APR would actually go up significantly. The other thing worth noting is, again, our regulation pool doesn't really work the same way as, like, a standard farm is, right? I mean, it does have, like, a pool start times, end times, right? And it does offer rewards based on, like, a shares per second. But we've actually built this this rewards pool, so that we can dynamically adjust those numbers on the fly, basically. Every 2 days or so right now, we're pushing those timers back and setting what the APRs should be based on how much the protocol was able to sell of the US Dex token. Now, assuming APRs in the farms, stay at a reasonable amount that's encouraging for new money to come in. Basically, there's really no limit or downside, or to how much we can offer in the regulation pool, because essentially, as long as the price of US Dex stays within a acceptable range for us, right? Like I said, currently between 1.2 and 1.5 ish, right? If people are still putting money in there, we're basically just turning that money over and putting it right back into the regulation pool. So in theory, that one could stay high, at least 2%, or if not higher, for an indefinite period of time.
Yeah, and that's something that I definitely think is worth really boasting and being proud about. I don't know how many, if people are experienced with tomb forks, there's just so much of them where if you're staked in their boardroom, the downtime where the protocol is not printing can go on for weeks.
Yeah. And also, what source of revenues do you have, or do you plan to have, that is not coming from the investors? Like, what kind of utilities do you plan to have?
So we actually have a very aggressive roadmap coming up here. Well, let me just, I guess, first just say this. We started at a surplus, right out of the gate. Like I said, we had a about 500K in backed assets. The bonding alone, as well as this peg regulation method, has allowed us to add almost $300,000 to that number in the course of 2 weeks, right? So we are definitely growing as a protocol and as a treasury. That's certainly growing fairly rapidly, as is. However, we our plans for the future is to create real utility, right? Like, not perceived utility or fake utility. We're not going to do NFTs, per se, to say this is our utility, right? Like,
Yeah, nothing tacked on.
I mean, not saying we're ruling it out, but that's not our core model. We want to sell shovels. In the gold rush, a lot of the miners, some of the miners got rich off of finding the gold, but the people that really made money were the guys selling the shovels and pickaxes, right? So, one thing that we're going to be introducing very soon is our automated strategies, right? And this is basically a way for people to invest in the protocol in a very simple manner, kind of a one click. Let me get into this strategy based on my risk level, and from there, the system will take your rewards from one pool, bring it to the other pool, let you take a set profit amount. And do this all in a very healthy manner, something that works for the protocol as well as the investor, right? This is something that doesn't really exist right now. We think we think there's a big market for allowing other protocols to use this, right? And there'll be a marginal fee structure, which will go to back to Treasury as well, right? We plan on building our own DEX here for at least for the ecosystem tokens, and expanding from there. Cross-chain bridges, and I don't want to give away too much, but we're going to have our updated roadmap out this week. So definitely check that out, and a lot of actual real utility here that we want to bring to the ecosystem.
Yeah, and actually, Loda asked, when do you plan to launch the auto strategies feature?
Ooh, that is a hot question. I don't want to give hard dates on it quite yet. It's not too far off, but before we implement these, we really want to make sure our foundation is really cleaned up, and not to say everything's not working right now, but just we're kind of perfectionists, and we want all of the DApp to be working perfectly, and we don't want to build the strategies on any little bugs or errors, like compound. When you start automating stuff. So we're spending the rest of this week to final cleanup, and just making sure everything's really crispy, and then over the next week or two we will start rolling those out.
Okay, all right, fair enough. And CG Discord is asking, how will you print DEX ETF once you have sold enough US DEX, such that the circulating supply at $1 will be greater than what is in the Treasury?
I'm sorry, can you repeat that last part? I didn't quite catch.
Yeah, how will you print DEX ETF once you have sold enough US DEX, such that the circulating supply at $1 will be greater than what is in the Treasury?
Oh, yeah. Well, so two things. One is the current system, the current calculation is meant to only sell the US DEX up until we hit the threshold, right? So, in theory, if people aren't, if there's not money coming into the Treasury, then we'll just be selling less of the US DEX. And that if that were to happen, like I said, right now we're operating, our surplus is growing rather than shrinking, right? So everything's working the way it should right now. If we were to go the other way, it would maybe slow rewards, slightly, but that doesn't seem to be the case at the moment. Also, too, we there is some margin of we're giving ourselves a little bit of slack. Like I said, it's not even, we don't even have to worry about that right now. But there is, like I said, we at some point we'd be willing to discuss some kind of margin of differences between the surplus and what's being sold. For example, like it's unrealistic to think that 100% of the people holding US DEX are going to sell, right? So there is some acceptable threshold at some point that we'd be willing to discuss. But like I said, we're the surplus is growing, not shrinking at this point. So we feel pretty good about it.
And it's quite remarkable that your surplus is growing when the crypto market cap is decreasing.
Yeah, that is there's definitely something to be said about that. As Jade had mentioned, our US DEX USDC farm is quite possibly one of the safest in the market. Very little risk to impermanent loss. It's a algorithmic stablecoin pegged to one of the most solid actual stablecoins, backed by real assets. And as well as our algorithmic stablecoin is also backed by assets in this case. So I think people are finally just getting to hear about this protocol, and kind of seeing what it could actually do. I think the learning curve is maybe our greatest challenge. We're just that's why we're here, and we want to make sure everyone has a good handle on what what's actually going on behind the scenes, right? Because if you were just to come in and you say, okay, well, this is the chart looks good and yada yada, right? But actually hearing how it works and knowing that there's assets backing it, and great questions about long-term sustainability, those are things that we think are really important for investors to know.
Yeah, I fully agree, and I think we're facing a similar challenge in that when you create something that is different and not just a copy and paste fork, even if the system is not that complicated in itself, if a new user or investor needs to learn everything about it from scratch, it does sound a bit complicated or daunting at first sight. So yeah, it's I do think that education is extremely important. And in the audience, do you guys have some questions that you want to ask to Dex Finance? Speaking of understanding the model. You can either write them in the chat or you can raise your hand and I can invite you to speak.
How about Ambi VJ? You want to come back on now? Here's your chance. There he is.
Yeah, thanks, buddy.
Yeah, welcome back.
Yeah, see, I don't want to say anything about super, not like that. I am really impressed with the Dex Finance. That's why I just want to, my dearly. Sorry for that anyway.
No, you're good, man. We appreciate the compliments. Like I said,
at very first, I did not expect this is also going to be same like other DeFi. After that, I realized your that system and process, everything is very much good. Last 2 years, I was so much disappointed with all the DeFis, but I didn't get any knowledge from others. I realized my own DEX is the right choice for everyone.
Do you
Because I
have a
understand,
question?
because I understand the cost system. That's why I just see this, and I just want to ask him a question about the how the liquidity is going to be support the DEX share.
Yeah, so in fact, you guys might get this later on today. I just spoke with the team before I came on here. We have the, if you guys have noticed, the Dex DAO link in the app has been it disconnected. When you click on it right now, right this minute, nothing happens. But the last few days we've been working on basically a dashboard for our treasury. This will also be where you'll be able to take part in community votes based on how much DEX share you're holding. But we're really excited to kind of bring this live to you. I mean, it's not a secret. Anybody who asks in the chat, we're happy to send you links to the treasury. In fact, it's on the links or contracts page in the Discord. But this dashboard is really cool to see because basically we've got it broken out into treasury-backed assets and liquidity assets, right? And basically what this will show you is it'll let you keep track with us what's actually in the treasury, how much of the circulating supply can be sold, and what our surplus is, right? In addition to all the liquidity that we're adding, right? Currently, we have over 20% right now of the liquidity for both DEX share and US DEX, and that number is growing every day.
I see that.
Yeah, basically we're just and this was one of the really great things about the bonding feature is it essentially allows us to not only add circulation and gives people a chance to get in at a good price, but we've found that most people that are bonding, they're taking those tokens and also providing liquidity. So in addition to they're getting a discount, they're providing their own liquidity, but now we also have additional funds that the treasury can use to add our own liquidity. So like every day we're just dumping a lot of liquidity into the treasury, and that'll be held there and until kind of the next phase of this. We're working on some interesting things, I'll say, with using treasury assets in order to kind of layer rewards.
Okay, and
That
I have
sounds
one
great.
more doubt. Can we have the second one? This is my last one. See, I actually burned in DEX ETF. Is that actually going to reduce the total supply in DEX share, or it's going to be circulated again?
So let me just clarify. You use your DEX ETF tokens to bond into DEX share, you're saying?
No. I know in the regulation pool, I staked DEX share. I'm going to get reward as a DEX ETF, right?
Correct.
Yeah. In that case, I just burn. I just checked one time. I just burn some 2.0 something quantity of DEX ETF. In that case, what is going to be burned? Actually, is that going to be taken the BNB or BUSD just that, or is that going to be burned the DEX share actually?
Yeah, I'm sorry, I'm having a little trouble hearing you. Broke up a little bit there. So basically, when you get your DEX ETF tokens, you're saying you're trying to use the bonding with that?
No,
or no?
actually,
Just
when
you burn them.
I'm just burning my reward.
Oh, burning them. Yeah. I gotcha. Yeah. So once you get those rewards, like I said, you can do a couple different things, right? You can either hold them and wait for them to appreciate in value.
Yes.
You can use them to bond with, right, for more tokens, right? Or you can burn them, right? And when you burn them, this is basically what you're doing is you're just burning your receipt token. This is just like a security measure that we take, right? Because basically when the ETF tokens are purchased, the actual assets are going into a vault, right? So unlike kind of some fakies out there, index funds like that, we actually go and there's held within the ETF contract are all those actual assets, right? So when you burn your ETF receipt token, what happens is you can either burn it and redeem one of a couple different tokens, BNB, Cake, USDC, and BUSD, right? So if you want, you can just basically take the value of what that is, and essentially what that's doing is it's cashing in your receipt token. It's going out and grabbing what your share is worth out of the vault, and it's going and selling all those 10 tokens and giving you back the value of those and whatever token you choose.
Yeah. In that case, I ask, is that any Dex share token going to be born or not? The total.
Yeah. Yes. So about 20% is ecosystem tokens within the ETF, and you can see the allocations they're on the ETF page. So there's a small amount of Dex share, US Dex, as well as the Dex IRA token. So yeah, technically when you burn them, you are selling a little bit, but it's very marginal. And the fact is that somebody had to buy those first, right? So like in most cases, our protocol is buying those tokens before you get them, right? So you're not causing any negative pressure. If anything, you're just bringing it down slightly.
I understand. So the Dex share total supply should be 100,000, right?
Total supply, yes. However, that's not all in circulation right now.
I think only 66,000 something.
Yeah, right. So basically, what you're seeing there is the rewards pool is filled up for the whole year, and there was a few thousand for pre-sale, and we held an extra couple thousand for our initial bond deposits. The remaining Dex share is actually vested out to us over a 1 year period, just for security reasons, just so there's not tens of thousands of extra Dex share floating around. So basically, the Treasury receives about 85 Dex shares every day. Then it just automatically comes into the Treasury. And then once the bond contract, the bond Treasury gets low, we fill it up from there.
That's fine. Very, very thanks. Deep explanation. Yeah, it's very good, very good. Thank you. Good luck, team. Everyone will get ready.
Thank you, sir.
There was one other question by Blue Flame, which is, what is the best way to compound into the regulation? Take out Dex ETF, sell it for BNB, buy Dex share and restake it. Quite a lot of options there.
Yeah, there really is, and this kind of goes back to my initial I mentioned this earlier, where again, we're not discouraging people per se to be in the regulation pool. However, the real design of the protocol is to allow people to take money out of the ecosystem without hurting the protocol. Again, if you're earning Dex ETF tokens and like I said, burning them for BNB and jumping back in, in fact you're definitely not hurting it. In fact, you're ultimately you're adding more liquidity. You're helping. Not a bad thing. If you're bonding into, you can use the bond system to bond into those same tokens. Again, you're creating a surplus in the Treasury at that point and adding more protocol on liquidity. So again, none of it's there's no bad ways. However, you may just want to consider just being in the farms at that point and just directly compounding those rewards.
But if you're in a farm and you compound your rewards, it means that you need to sell some DEX share to have some USDX or BNB, right?
Yeah, that's correct. I mean, like I said, a balanced approach is always good. You know, an even amount in all the pools is healthy all around. And yeah, there is some sell pressure when you're compounding. But the flip side of that is if you are compounding in the pools in the farms, essentially that means that there's higher APRs for people in the regulation pool, which you know, makes the protocol as a whole more appealing to new investors coming in. So, you know,
Okay, yeah.
kind of a double-edged sword.
All right. Then a question from Emix. When one sells the DEX ETF, do they have a choice of what they want to swap with, like sell DEX ETF for BNB only, or is it a fixed breakdown percentage as per what is shown? Because the DEX Tresk is showing the asset allocation of DEX ETF, I believe.
Yeah, so right now there's 4 options. You can burn it for BNB, BUSD, Cake, or USDC. Or the 5th option, I guess, would be to redeem for all of the underlying assets, right? So rather than converting to one specific token, you can actually just take all the tokens together, all the tokens within the ETF. You can just take those right to, have them sent right to your wallet. It is actually worth noting, we've had, when you burn to a single token, what's happening is it's going to the vault, it's getting all those, your allocation of all 10 of those tokens, and then it needs to sell every single one of those to get you, to convert them back into your one token. So, gas can be somewhat relatively higher than maybe what you're used to. 2 things to note there though is one, when you see the estimation, like when your MetaMask browser in your little modal pops up, that's typically about twice as high as it actually is, right? So you'll notice, like, if you go ahead and do that, and look at the transaction afterwards, you'll see it's usually quite higher on the estimation than it is in actuality. And that's just because we don't want failed transactions, so we'd rather have the estimation be higher. But when it goes through, it tries to use the least amount of gas possible.
Of course.
Also, when like I said, the other option there to redeem all the assets, that's about half as much in addition, because when you redeem the assets, it doesn't have to go through like the PancakeSwap router to actually sell those tokens. It's just a direct transfer from the vault to your wallet. So if you're planning on keeping those, some of those tokens, or it might be a cheaper option for you to just redeem the assets inside and then sell off what you want individually. And also lastly, that whatever that gas is, it doesn't go up, like you're not, it's the same gas to sell $100 worth of ETF tokens as it is to sell, $1,000, right?
Yeah.
So if you're worried about that, it could be a good option for you to kind of just stack up and amortize those gas fees over a larger amount. And
you mentioned that there are many different tokens behind the XETF, and your colleague has showed an image with the assets. How did you choose them? I see Cake, ETH, ADA, Ripple, and of course your own tokens. How did you choose them?
Yeah, that's a good question. What we did was, because we had the Dex IRA token, this has been, we've had this Dex IRA token for almost a year now. And for those that aren't familiar with the Dex IRA system, basically it's a reflection token, but kind of in the similar way that we're regulating the PEG, right? Where, we're selling an asset to offer another asset. Basically, anytime there's a sell order on Dex IRA, 30% is taxed if you sell prior to the 1-year holding period. at which point the sell tax can be waived. But if you sell within that period, and you're going to get taxed 30%, that 30% goes back to the holders. But it not like we're not sending like a true reflection token where you would just get more Dex IRA tokens. Basically, similar fashion. When the sell order happens, it goes into a different holdings contract, and then when you come up in the queue, we have a dashboard where you can select which reward choice you want, right? And so there's a dashboard. Again, mostly blue chip type of tokens, some partner tokens. But long story short is when we went to set the first ETF fund, we basically just went through the numbers of what our current holders were selecting as their reward options. We felt this was a good way to be fair and give people what they already are asking for. That being said, we know that there's new investors in the space now, so we want to cater to those as well. And shortly here, we will start to have kind of votes on which tokens should be added into following ETFs.
All right. Okay. Fair enough. Two last questions. Blue Flame is asking, could you go over the security measures in place for the protocol?
Yeah, I can discuss that a little bit. That's actually a point of pride. In fact, one of our guys on the team is he specifically runs like a very large team running security for major companies, corporations. So it's always something where we look at before deploying anything. A lot of the more recent attacks have to do with the flash loans. You guys have heard of those. Every single contract that we have has re-entrancy guards on it, which essentially prevent basically tricking the system into thinking that there's more tokens than there should be, or the price is higher than what it is, right? In addition, we have everything. Nothing. There's no one point of a failure. We have redundancies all around, whether it's multi-signature wallets or separate contracts that handle different things, right? With different deployer wallets, so that worst case scenario, even if there was something to happen, the bad actor would be limited to a smaller amount of what could be potentially be lost. The ETF, for example, is the ETF rewards pool, for example, is a good use case of this. As I mentioned before, we have the ability. We could just set it for a year and just put a bunch of ETFs in there, right? But rather than doing that, we have this automation that basically handles the PEG regulation, and then every 2 days just puts in just what it needs for the next 2 days, right? So at the end of the day, if somebody the off chance that something were to happen, they're going to get 2 days worth of ETF tokens minus whatever has been already sent out to people staking, which is we don't intend or plan for that to happen, but we're
it's better to be safe than to
it's acceptable.
It could be a lot worse than some of the other projects that have been exploited in the past, right? Where they don't have the same fail safes in place, and then you see them have all their liquidity drained and have to really freak out and figure out how to restart from the bottom.
Yeah, it is also worth mentioning too. We use definitely cutting edge type of stuff, but we're using the very best industry standards, as well as partnering with leaders in the field. We're obviously Olympus for our bonding stuff. Very reputable name. Gnosis for our multi-sig treasury. They're the industry leader for that.
Yeah.
Gelato for some of our automation stuff, which they have the control of the market on that one. So none of the the potential weak points are not even we double check everything and everything's audited, of course, but we like to have a strong starting point by using the best out there.
Yeah, I totally understand. We're using Gnosis Safe for the same reason.
Along the same line of thoughts, some of our holders have asked us to add our Dex IRA token to the rewards pool for Dex IRA, so that you can collect Dex IRA by holding Dex IRA, right? But that's probably the most popular way for exploiters to attack reflection tokens, is if they're reflecting their own native asset back out. So that's something that we haven't pushed forward yet, because we would never want to do anything where we're unnecessarily risking the health of the protocol.
Yeah, I think it's a good choice, because the investors may be asking for it now, but if there is an exploit, then you would still be the one responsible for it.
This is true.
Last question. You mentioned you could maintain USDEX above 1.2. How long do you think that will stay before going back to PEG?
Yeah, that's another good question. Over time, we do expect that to somewhat level out. It should be in theory, it should be a gradual decline over the course of a year. Clearly we could bring it back there right now. However, the way that the protocol is designed is part of those sales are going to go back to the Treasury in order to back the PEG, right? So what happens is if we're selling, if we're able to maintain a PEG over 1.2, as I mentioned, it's 1.45 now. Every time we make a sale at 1.45, we're creating that much more of a surplus than we would if we were to sell at 1 or 1.1, because the Treasury is going to back at the price of $1 or just under $1 if it were to fall below. So the higher we can go above PEG without being harmful or causing unnecessary risk to investors is better for the protocol. Personally, I would like to see it stay around these levels for the foreseeable future, at least a few months. Like I said, honestly, over the course of the first couple weeks here, we have seen a couple dips, and they got eaten up really quickly at 1.2 or before 1.2. Again, that's not even something we can necessarily even control. The market dictates what the fair valuation is and what investors are willing to risk above PEG. And again, if at the current rates, the current APRs, even if it were to go back to under 1.2, you'd make that up in a week or so, just with the rewards alone. And again, it's going to range between these points. So if you were to get in at these levels, and let's say it jumped it back down to 1.2, you don't have to sell at those levels, right? You just wait for it to get back up, and if you want to take your profits, do it there.
All right, thank you. Well, for me, it was very clear. I appreciate you coming here, answering all your questions, and giving quite a bit of insight and even some hints at the roadmap, which is always a good thing. If you guys have any question, I suggest that you go on their Discord. I've shared it in the AMA channel. And I hope that we get to speak again soon.
Yeah, we'd love that.
Absolutely.
Thank you for having us on.
Thank you so much. Bye bye.
Okay, talk to you soon.
All right, take it easy, everyone.